You're listening to the Breakaway Wealth Podcast, the show that helps you build wealth faster, think outside the box, and break out of the herd. Here's your host, Jim Oliver.
Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today, Fred Moskowitz. Welcome, Fred.
Thank you, Jim. It's great to be here.
So, Fred, before we dive in, introduce everybody to yourself just a little bit, and then we'll get to know each other as the audience gets to know you as well.
Great. Thank you. My name is Fred Moskowitz. I am very active in the mortgage note investing industry. I've been since 2010. And even before that, I will share with you that I had a long and successful career working as a computer engineer, working in the tech industry. And I love that. I love that work. Something that happened to me along the way was I came up during the dot-com boom years and the birth of the internet. It was really exciting times. But what happened after that? We had the bursting of the dot-com bubble. We had the September 11th terrorist attacks. And so there was all this turmoil in the world. And what it made me realize was that no matter how talented of an engineer I was or how valuable of an employee I was, if things were not going well at the company or in the industry, I could lose my job through no fault of my own. And that made me realize that I was taking on a huge risk relying on my paycheck for my work as my only source of income. And because of that, this is what inspired me to start learning about alternative investments, about buying and building assets which generate income and cash flow for me. And that led me right along this journey to where I am today. But today I focus on mortgage notes and teaching and sharing with others a lot of the different strategies and concepts I use. Because mortgage notes, it is a great asset class. It really is. Banks have figured out long ago that they would rather be the lender and be a lien holder on title of a property instead of owning the property. And we can get into more distinctions about that later on.
Yeah, no, I love that. Well, first of all, you made that pivot. And, sometimes, especially when we're going through it, it doesn't feel inspiring, right? It doesn't feel comfortable. It feels scary.
It does.
But thank goodness you got that pivot and you changed your focus. And, I don't know about you, Fred, but I see a lot of young people out there. I'm 59. So when I was younger, they said, go to school, get a job, work hard, and save your money. Yeah. And someday you're going to have a nest egg to live off the rest of your life and not run out of money, or hope that you don't run out of money.
Yeah. That narrative was true for the previous generation.
Yeah.
It really was. And this is what we learned because that's what everyone did at the time. But things have changed now. And
things have changed. But, I think young people have an advantage that they never bought into that lie. And it's funny because I was watching the news a few days ago, and it was the beginning of this Boeing strike. And they said, hey, in 2014, they took our pension away. Now we want our pension back because now they finally realized, hey, now they have us doing it ourselves. There isn't like a pension manager saying actuarially, if this many people come in and this many people leave, we can guarantee your income for the rest of your life, which, by the way, is golden handcuffs, because they're saying you got to work here 20, 30, 40 years, whatever it is. That's where firemen, military, government workers, they get these golden handcuffs. But when you break away, the name of the podcast, or you get inspired, like Fred said, then you go, wait a minute. I don't want anybody's golden handcuffs. I mean, I know they're gold, but I don't want handcuffs. I want to be free, and I want to build financial freedom through cash flow and assets. And then I think, so I love that. Now let's talk about, as an engineer, and everybody knows it's hard to get into engineering school. It's hard to do the jobs with software engineering that you did. You got to be smart. So and analytical, like not just emotional. So you didn't just come up with mortgage notes out of the blue. There's a reason, right? Like you said, it made sense. This is what banks do. Okay, so we're always talking about be your own bank, control and pay your self-interest, control the cash flow, everything a bank does. The bank knows the loan is an asset. It's not a liability. The deposit is a liability.
Right? This is true.
So talk about, I'm sure there are a lot of people in the audience, Fred, they have no idea what you're talking about, mortgage notes. So
let's talk a little bit about that. So there exists a huge secondary mortgage market where mortgages are bought and sold every day. And I'm sure just about all of you listeners out there have experienced this at some level. Let's say, for example, you have purchased a property, or maybe you refinanced a property. You took out a loan and you sign all the documents at closing. You go through the loan process, everything, and then you start making your mortgage payments. Well, wouldn't you know, after about 3 or 6 months, you get a letter from the bank saying, "Dear Mr. and Mrs. Homeowner, we're writing to let you know that your loan is being sold. Here's the address of the new lender and their contact information. And starting next month, please send your payments to the new lender. And by the way, don't worry, none of the terms of your loan will change. Everything's the same. The interest rate, the payments, the term, everything's the same." And so people may know about that, or maybe it was a surprise to them, but the loan got sold, and it got sold for less than the loan balance. And what happens is those will get put into a Wall Street security or a bond, and loans get sold over and over again over the years. And so for us as investors, we can tap into that secondary mortgage market, and individual investors can buy a loan and own it and be the one receiving the monthly payments instead of the one making the monthly payments. It's powerful. So if you have capital available, you can do this. You can buy a loan. You can own a loan in your retirement account if you wanted to, even. So the strategy that I talk about in my book. And so there's all these different ways to own mortgage loans. What I love about this is that you're investing in something that's backed by collateral. There's a hard asset backing your loan, and you can earn a nice rate of return. And so it can be a really powerful business. And a lot of people know about real estate investing, but this is a niche area of real estate investing where you're not owning the property, you're owning the debt on the property. And what's nice about that is the lender does not have any of the management responsibilities of the property, or even any of the liability, or maintenance, or any of those things. Those are all taken care of by the owner.
Yeah, I love that. I mean, if you think about it, people used to say, "Oh, you should do storage because storage eliminates two of the problems with owning real estate: the tenant and water." Right? But you're eliminating all of it. And by the way, like you said, banking is the most profitable business in the world. They don't want to own the property, right? If they own, by the way, I always say to somebody, if I make a hard money loan to somebody, which I just did within the last couple months, and if I do that, then I'm going to make sure the interest rate is right, that is being paid to me. But what I'm really going to make sure is the collateral is right. And what I mean by that is I'm going to want them to default. because I want to keep the property. Well, maybe, but let's say that I loan somebody $300,000 and they put up a property that is worth $1 million, and I could fire sale it for $700,000. I want you to default on that loan because I just made a lot of money, right?
But in most likelihood, the borrower's not going to default on that loan. You're dealing
right
with a very sophisticated and savvy person, financially savvy person. They're making that loan because they have a plan for the money, and they're not going to default. They're not going to let a property go or put it in jeopardy by defaulting.
Yeah. No, you know what? You're right. In fact, one time I loaned somebody money and he put up this warehouse, this industrial real estate. So when I say industrial real estate, I mean, there's no customers going to this warehouse, right? It's not like commercial real estate. And it was such a good deal that I said to him, hey, I hope you default on the loan. He goes, Jim, I would sell everything I have before I default on this loan.
Yeah, exactly. Yeah, he has other means to cover the loan if something didn't work out.
So Fred, tell us about your book.
Yeah, thank you. The book is called The Little Green Book of Note Investing. It's available on Amazon. And when I wrote this book, I set out to really provide a high-level overview of note investing, how to get started in it, getting started, whether you want to be an active note investor or maybe you want to be a passive note investor. And, for someone that is focused on their business, their career, don't have a lot of time, you can be passive note investors, different strategies for that. I talk about how to perform due diligence, how to analyze the loans before buying them, how to manage the portfolio, as well as one of my favorite topics is how to use your retirement account for note investing, which can be really powerful strategy because it's a great source of capital.
Yeah, so I like that because, Fred, I'm not in favor of government retirement accounts, right? I would tell people, not to put money in there, but guess what? A lot of people have money in there. Yeah. And they don't know what to do with it.
Yeah.
So they think, okay, well, am I going to have self-directed, real estate and all the things that you just brought up? There's a lot of people, and most of the people that have a considerable amount of money in a retirement plan, probably, unless they're making that shift that you made, okay, and a lot of people aren't yet, or they don't do it overnight, is they need something more passive. So talk about how you work with clients. And let's say I'm a busy doctor and I got $3 million, $2 million, whatever it is in my retirement plan. And I think, you know what? I know that my Wall Street report keeps saying I'm making money, but it doesn't really seem like my balance is going up that much. So tell me how you would work with me if I'm that guy.
Yeah. Great question, Jim. So I'll explain how it works for passive investing. So there are note funds that exist out there where note funds, they raise capital from individual investors. They take that money and then they go out into the secondary market and buy loans and perform the due diligence and analysis. And then from that, they're receiving the payments and paying back a rate of return to investors. The benefit for investors is that it's completely passive for them. And you get to leverage the experience, expertise, and the relationships of and experience of the fund managers to operate this business. And so it's a great way for someone to get involved that doesn't have a lot of time. So that's in a nutshell what passive investing is all about. And there's a lot of options out there, a lot of different options depending on your risk tolerance, your timing, and some other parameters. But that's something I always get asked about a lot.
Yeah. So, Fred, there's a great book out there. I don't know if you've ever seen it, but it's called Buy Back Your Time by Dan Martell. And it's funny when you read a book and it's talking about something and you can relate it to a different topic, if that makes sense.
Yeah.
So when I think of passive investors versus active investors, I also think of the Dan Sullivan book with Benjamin Hardy, Who Not How. So if I want to be a real estate investor, I want to be a mortgage note investor, I can spend my time and I can learn how to do it. I can get a mentor. I mean, I don't know if you offer coaching and things like that, but I can do that and I can learn it myself, right? Or I can go hire someone at a lower rate than my buyback rate, meaning if I was going to quit my job, stop doing anything, could I hire somebody for less than that to do all of this for me, right? And if you think about it, when you're running your business and you're running your life, that's what we're talking about, right? But You're running your business. There's no CEO in the world that wouldn't have at least one assistant, and probably very successful entrepreneurs and have a personal assistant handles all their personal crap and a professional assistant that handles all their professional crap, because that person costs less than my time of doing it and learning it and doing all those things myself. And I'm probably not good at it.
Yeah.
So that's how I see people that say, hey, well, if I'm passive, then I got to pay somebody a piece of, so what? So what?
You're still coming out ahead.
You're still coming out ahead, and I got all my time.
Right. So you have your time, and now you can focus on what you're really good at, or the thing you're passionate about, or growing your business, or whatever that is, right? For each, just a very individual decision for each person. But it allows you to focus on, if you want to focus on being a great mortgage note investor, fabulous. You can do that. But if
read
you
your
want to
book
focus,
and get started.
If you want to focus on a different area in your life, great. Well, this allows you to do that. And that's the whole thing. It's leveraging your time and leveraging the time of others as well.
Yeah. And you know what? Like you said, what does a bank do? So just and I'll wrap it up on this, and then I'll have you tell everybody how they can learn more about you. And you told them we'll put the link in there for the book for Amazon. I'm going to get it because I haven't read a book on mortgage notes, and I would love to hear your perspective. And it's a sector that I might be interested in figuring out for myself, because I would tell you I'm low. I have businesses, but my real estate isn't where I would really like it to be. And my alternative investment stuff is not where I'd like it to be. Well, I say alternative because I have a lot of crypto stuff, but that's a whole nother show. But, the way that I look at this and you think about hiring somebody is I bring people on the show so that you can get to know them and find out if they're right for you or not.
Yeah.
Because I guarantee you, Fred doesn't want you to be a customer if you're not right for him. And you don't want to be a customer of his if mortgage notes aren't right for you. But how the heck are you going to know unless you do a little research?
Yeah, you have a conversation, right?
And have a conversation. Yeah. Exactly. And everybody that breaks away, like Fred. And I'll tell you what, engineers, I'm impressed because engineers are harder to get to break away. Not that there aren't a lot of entrepreneurial engineers, because I know lots of them, but they normally, when they do it really well. And again, because I'm not a detail guy, I tend to gravitate to partner with people that are engineers and detail oriented, because I know that I'm not. And so, all right. So we're going to put all that in there.
Complementary skill sets. I love that.
Exactly. Yeah. Exactly. I'm the vision guy. I could build us a vision on how we're going to do exactly what the bank does. And what you're doing is what the bank does. The bank, somebody goes and deposits money at the bank takes that money and loans it to a borrower. As the borrower pays the bank back, what do they do with the money? And sometimes people say they invest it. No, they don't invest it. They loan it out again. The loan is the asset.
Yeah.
So and they take your mortgage payment, my mortgage payment, a bunch of other people's mortgage payment, and they loan it out again. And as an engineer, you're going to hate this term, but I call that velocity of money, not scientific velocity.
Yeah, velocity
moving the money.
Yep.
Yeah.
It doesn't stay idle.
And motion is the law of God. If air doesn't flow in and out of our bodies, we die. If blood doesn't flow through our bodies, we die. Money, it's the same way. If money's not moving, it's dying. All right. All along this way, Fred, you had to get some great advice. If I just asked you, what's the best advice that you've ever gotten? What's the first thing that comes to mind?
Great question. The first thing that comes to mind is this, that if you want to be successful at something, find someone who's already sitting in that place and ask them for help.
Love it. I love it. If we were going to go climb Mount Everest tomorrow, which I'm not, but if we were, now we'd have the right jackets, we'd have the right goggles, we'd have the right gloves, boots, everything. But you know what? I'm gonna make sure the one person that we're gonna have that's gonna be better than anybody on earth, if I'm going up that mountain, is the best Sherpa.
Yeah,
I'm getting number one. Whoever number one is,
over and over.
He or she, they're going with me.
Yeah,
because they've gotten up and down that mountain, right? So exactly. I love that advice. A lot of people have said it in their books, and they've put a different wrapper on it. Tony Robbins talks about it. Dan Sullivan talks about it. But I agree with it 100%. Find somebody that has what you want, and get mentored by them, partner, learn from them, all of the above. Or if you have the opportunity, say, can I just give you money and you do your thing and take a little piece of it and give me back the rest? Like, that's a pretty good deal. All right. Last question, Fred. If God came down from heaven and only allowed you to retain the knowledge that you've received from one book that you've read, what would that book be?
That would be a book by Napoleon Hill. And it's not Think and Grow Rich, which is a great book, but the book Outwitting the Devil by Napoleon Hill. It's all about mindset and all about defeating the devil inside of us, which is the limiting beliefs, the fears, all the things that are inside of us that keep us down. They keep us from excelling. So many great insights and takeaways in that book.
Number one, I was just telling somebody about that book over the weekend, and I asked them if they had read it. They said no. And I said, okay, listen, if you're going to read it, I would read it, but here's the way that I loved ingesting that book is there's two different versions on Audible. There's one where it's just the author reading it, or you know, the narrator reading it, or not narrator, whatever that person would be. And then there's another one where it's the guy that's interviewing the devil, but then there's a different voice for the devil. And for some reason, Fred, that one had the impact on me, because I love when I tell people it's outwitting the devil, and I tell them in the book, the devil says, you got to call me His Majesty. Well, why would I call you His Majesty when the king of the universe is God? And he says, because I control 98% of the earth, and I do it with mindset. Just like you said, I get people to doubt. I get people, all of these things. And I had a friend of mine, she's starting her own business, and she said, man, I just wish I had a little bit of your confidence. And I said, well, confidence is a skill set. How do you get confident? And you know, and so we started talking about that, but it's a mindset.
Yeah.
Right? You can build your confidence.
Anyone can. Yeah.
Anyone can, right? You weren't as confident with mortgage notes in 2008 or 9 or whenever you said you started, or 10, that you are now.
Yeah, absolutely. And in the same line, you weren't as confident as being a podcast host the day you recorded episode number 1 as you are today, right? How do you improve? You keep doing it better and better each day, improving along the way. Yeah.
Making mistakes, doing it the wrong way, learning, doing it over. Okay, so you're gonna love, and Fred, thank you so much for being on the show. I encourage everyone to go to Fred's website, which we're gonna put all the links in the show notes. Excuse me, and learn. and decide if it's for you. Reach out if it is. And I'm sure there's lots of ways to get connected with Fred and read the book. I'm going to get the book as soon as we're done recording because I want to learn more. And so thank you so much, Fred, for coming on the show. You're going to love how we end this, Fred, because we end it the same way every week. And our outro is, now I'm drawing a blank, is The Strangest Secret. And the strangest secret is, oh my God, Earl Nightingale.
Earl Nightingale, yeah.
Yeah, Earl Nightingale and The Strangest Secret, which the strangest secret is whatever you think you will become. It's mindset.
Yeah.
So thank you, audience. Thank you, Fred. Godspeed, everyone. We'll see you next time.
Thank you.
Here's the key to success and the key to failure. We become what we think about. Now let me say that again. We become what we think about.
Thanks for listening to the Breakaway Wealth Podcast. Be sure to subscribe to this show wherever you're listening so you never miss an episode. If you want to start increasing your wealth building ability right now, go to community.createtailwind.com to join our free online community and get access to free, in-depth training designed to help you build real, lasting wealth. See you next week.